There's normally a tug of war in M&A deals. Buyers often want extensive reps and warranties, where sellers want minimal reps and warranties. Buyers typically want to hold back funds and indemnity escrow in case of a seller breach of those reps and warranties. Representation and warranty insurance is a type of insurance policy purchased in connection with corporate transactions and covers the indemnification for certain breaches of the representations and warranties in the transaction agreements. It is designed to provide additional flexibility in addressing these obligations, for example, by reducing or eliminating the need for an indemnity escrow by the seller. Representation and warranty insurance can be purchased by either the seller or the buyer. Seller-side coverage is a form of liability policy covering the seller's liability for claims of breach of a representation or warranty. Buyer-side coverage is a form of first-party coverage, directly compensating the buyer for alleged breaches by the seller. A key point of negotiation of representation and warranty insurance is the amount of limits and retentions. Limits are often set at about 10% of enterprise value, with retentions typically in the range of 1 to 3% of enterprise value. Premiums generally range from about 2 to 4% of limits. The responsibility for the amount within the insurance policy's retention is often split between the parties in the form of a deductible in the transaction agreement. Representation and warranty insurance can also provide a mechanism for recovery when pursuing the seller is expected to be difficult. For example, if there's numerous sellers or there are foreign jurisdictions involved, or there might be some insolvency concerns. Buyers should be aware, however, that representation and warranty insurance does not provide as broad coverage as a seller escrow of the same size, and so is really not a perfect replacement. Representation and warranty insurance does not cover known breaches which must be disclosed. So if the buyer, for example, has a particular concern about the way the seller has been handling an environmental issue, representation and warranty insurance coupled with an environmental representation is really not a good solution. In addition, there are certain standard exclusions such as asbestos or an unfunded pension liability, and the insurance company will perform a detailed underwriting process. During this process, they may add deal-specific exclusions directed at high-risk areas. For example, excluding environmental and products liability representations for a manufacturer of heavy equipment. Thus, to the extent that reps and warranty insurance is used to replace part of the seller's escrow, the recovery available to the buyer will not be as broad. The insurance also provides payment of a premium and upfront underwriting fee and will have a retention that leaves some of the risk on the buyer. The underwriting process to purchase representation warranty insurance can be as short as about 7 days, although the initial phase of the underwriting can start much earlier. A key issue for counsel is coordinating the retentions, definitions of loss, and subrogation clauses in the representation and warranty insurance to match those in the purchase and sale agreement, as well as the party's intent as to the risk borne by each party in different situations.